This is another market outlook trading video where I'm going to show you the key levels and buyers to focus on for the new trading week ahead. Now, this week has been a very difficult week, and that's why we were quite patient in taking the highest probability trading setups. Now, you can see that this week we did just about 149 pips in profit. Okay, it's not very fantastic, but nonetheless, it is still profit. Now, such weeks, it's where a lot of people actually lose money and they blow their accounts. In fact, we have received some emails from some of you that mentioned that you actually lost a lot of money and you wanted advice on what you should be doing. Now, this is the reason why I take the time on a weekend to record this video for you, because this is where I share with you the things that you need to watch out for and also share with you what I expect the market to do moving forward. So last week I did mention that this week is going to be a very difficult trading week, which indeed it was. So this hopefully illustrates why it's very important that you watch this video and you take note of the key levels that I'm going to point out to you shortly. Okay, so if this is the first time that you are visiting this channel, right, please hit the subscribe button. Okay, we also run a Telegram channel which you can see over here, where we send out our free signals. Okay, we send out other educational content on this channel as well, so please join us over there. Okay, it's totally free and you gain a ton of value. I will leave a link to this in the description down below, right? So just join us there. And if you have not yet subscribed to the channel, right, please do that as well, because we have many educational videos which will help you become a better trader. Now, with that being said, I want to move on into the analysis for this week. Okay, so today is the 11th of July and we will be preparing for the trading week of 12th July to 16th July. Now, the first thing that I always like to do is I always like to look at the Forex Factory Economic Calendar. The reason I like to do this is because it gives me an expectation of how the market is going to move. So if you see a lot of conferences, for example, right here you see that there is a BOC press conference, you can see that there is this BOJ press conference. When you see things like this, it tells you that the market is probably going to be very whippy. Now, I've explained this concept many times, but let me just do a very quick refresher about why the market is very whippy ahead of a press conference event like what you see over here. Now, the reason why this is so is very simple. It's because during a press conference, no one can actually predict what will be said. Right? We do not know what the chairman will say. We do not know what kind of questions will be asked. And for this reason, big institutional players do not want to go in just before the event, because if you do not know what is going to be said during the event, then how can you predict the direction? Right? So it doesn't make sense for them to actually put big money before the press conference. Now, contrast this to something like this USD PPI data, which is what I call a hard economic data, where it's a number. Now, chances are big institutional players already know what this number is, right? You and I as retail traders, we probably won't know until when data is released. But big institutional players, they already know this number and they have already taken their positions ahead before retail traders like you and I actually take our positions. So for this reason, this kind of economic data, it's fine, but when you see weeks like this, for example, next week on the 14th of July, we have BOC, we have right here another BOJ, and then you have this testify and this testify again. So again, next week is looking like a difficult week. Okay, unfortunately, okay, I do not like this kind of weeks, but it is what it is. So it's very similar to this week that we just had. You can see that this week we had our speech right here. We had a speech and we had the FOMC, which I warned you about last week, right? In last week's market outlook video, I actually warned you about this. So this is why it's very important that you pay close attention to what I'm about to say in this market outlook video, and more importantly, you take notes. Okay, you don't just watch this and forget about it, because that's not going to do you any good. Okay, there's no point watching and forgetting about it and trading without a trading plan. Okay, please take note of the levels that I'm about to show you shortly. Now, as always, I'll be analyzing the markets. Okay, I'll be analyzing these currency pairs right here using the MPE trading strategy that I teach in this free day trading guide. Okay, so as a very quick refresher, MPE stands for market condition, price level, and entry. Now I won't go through what each of these steps consists of, because this free day trading guide can be downloaded. Just use the link in the description down below, grab your copy, okay, click right here, put in your email address, and we'll send it to your email address and you can download it. Go grab this because it's free and it won't make sense to you if you do not actually study this day trading guide, or rather you do not read what the MPE stands for. Okay, there are also a lot of other valuable things like how do you read candlesticks, what are the 4 stages of the markets. Okay, ton of good information right here in a PDF that I have prepared for you. Now, with that being said, let's move on to the charts. Now, the first thing I like to do is I like to look at DXY. So right here we can see that DXY, it's a bit tricky. Okay, so let's start with the market condition, because remember we are using the MPE. So M stands for market condition, P stands for price level, and E stands for entry. Now, market condition wise is a little bit tricky, because if you were to switch to the line chart, you can see that this is a high, this is a low, this is a higher high, higher low, higher high. However, you can see that right now price seems like it wants to break below this swing low. But then again, this swing low is not that significant, okay, because we do not know if this is really a valid swing low, because you can see that it just barely moved up a bit. This swing low here would be a better, or rather more significant swing low to consider. Now, anyway, what I see is that probably price is going to sell down a bit more, okay, because right here there are a lot of stop losses being placed below this, so the market has to hit these stop losses first. So I'm expecting price to go down lower, okay, meaning that even though the market condition is relatively bullish, I still expect price to come down first, okay, because if you look at this right here, this is the high, this is the low, higher high. If you do not view this as higher low, then this low right here hasn't been violated. So the market condition is still bullish. However, right here, I'm seeing that this bearish momentum is pretty strong. So I expect price to just sell down here and then probably rebound slightly from here and probably hit upwards. Now, one thing to note is that if we do get a bounce from this support level, this level here will be resistance, because this will resemble a head and shoulder pattern. So you have the left shoulder here, the head, and the right shoulder here. Okay, so this is not a very clear setup, so it's not very clear. And remember, next week we have the press conference, so that means that next week is probably going to be another week where the market is not very clear and it's going to be just up down, and you know, if you're going to take a breakout trade, chances are you're going to get whipped out. So be patient, right? Wait for price to hit this level right here. Okay, it might take some time. Do not chase the market. Wait here. Look for an entry trigger if you want to trade directly into DXY. But if I have to choose a side, I would say that DXY is still more bullish because of this entire up movement here, and this high and this higher high. Okay, unless this low right here is broken, I would say that I would still look for buying opportunities right here rather than to sell it, let's say somewhere here, and try to trade counter trend. Okay, so that's my personal point of view for DXY. Now moving on to euro dollar. Euro dollar is also a little tricky. Okay, in fact, right now the market is pretty tricky. So if you were to look at euro dollar, the market condition is actually bearish, because we have a low here, we have a high, lower low, lower high, lower low. Okay, however, one thing that you have to know is that last week, or rather this week that we just traded, you can see that price did a fake out of this key level right here. Okay, we have this doji candle here and this low right here. This is actually just a fake out, because price closed below and then it closed back above. So even though the market condition is bearish right now, I'm seeing some signs that this could be a potential reversal. Okay, so just a disclaimer, most of the time you should be trading with the trend. Okay, in fact, in the free day trading guide, I did say that if the market is in a downtrend, you should be looking to sell only. However, in this case, you can see that there is looking like a sign of bullish trap, or rather, sorry, not bullish trap, more of a bearish trap. Okay, bearish traps means that they are trapping bears. So right here is kind of like bearish trap, and it's looking actually kind of bullish and looks like a reversal in the making. So for this reason, I would prefer to lean towards a bullish setup, even though it's counter trend. Now, if you are a new trader or you're still struggling, I advise you to skip this setup. Okay, it's okay to skip a setup, right? Because this is counter trend, and counter trend is harder and it's not that easy to nail. So please skip this. But if you really want to trade, then just wait for price to retrace into this zone of support, which is given by this left shoulder, hit right shoulder, or this spike low right here. So really, I would draw this zone as an entire zone of support. Okay, the top level is given by the left shoulder. Okay, symmetrical inverted head and shoulder pattern, and this right here is given by this pin bar, which we saw a fake out on. So this is what I would look for. I would look for a retracement down here, look for an entry trigger in the form of a candlestick pattern. It could be a hammer, it could be an engulfing pattern, it could be a morning star. Okay, again, if you do not know what I'm just shared, okay, what I just said, all these are terms that you don't understand, please get our day trading guide, because I cover it all in this day trading guide. So please go grab it and you'll understand what I mean. Now, if you look for an entry right here, just be mindful that you are still trading against the trend, because this swing high right here is not yet violated. Okay, it's not broken yet. So for this reason, if you were to buy somewhere here, you have to make sure that you take your profits when price starts moving up, because you are still trading against the trend. Okay, now let's move on to pound dollar. Pound dollar, similar to euro dollar, same setup. Okay, so again, market condition, it's bearish because you have the low here, high, lower low, lower high, lower low. However, this one is a bit clearer, because if we were to switch to the line chart, you can see that this one, there is sort of like a inverted head and shoulder pattern. You have the left shoulder here, you have the head, and you have the right shoulder over here. Now switch back to the candlestick pattern. You can also see that this is resembles a double bottom pattern. So this is the first bottom and this is second bottom, and this right here is the neckline. So we are already seeing that there is a form of reversal taking place. So again, similar to the euro dollar trade setup, the market condition is bearish, but it looks like there is a reversal. So again, if you are a new trader, please skip this setup. But if you have a bit more experience, then what you can look for is, you can look for this level to be broken first, because once this level 1.39027 is broken, then this double bottom is confirmed. And when a double bottom is confirmed, that means that the market condition is now bullish. So just be mindful that the next level of resistance is right over here, as given by this level right here. You can see that previously was resistance here, almost hit right here, support, here resistance. So if you were to buy when price breaks above here, just be mindful that resistance is very close. Okay, do not chase after the market if you cannot get a good risk to reward setup. Okay, ideally you want to aim for a risk to reward of 1:1.5. So if you are risking, for example, 30 pips in stop loss, then you should look for a target of 45 pips minimally. Okay, that's a good rule of thumb that you can follow. Now, of course, if this level is broken, then the next level would be the recent high right here, and you can see that between here to here is a good almost 100 plus profit, or rather there's a space of about 100 plus pips. In fact, if I were to get the exact measurement, sorry about that, measurement is actually 215 pips. Okay, so there is quite some space between this level to this level. So I would definitely prefer for this level to be broken first, rather than to buy somewhere here where, you know, potentially price could end up doing something like this and then, you know, start selling down. Okay, so just be mindful of this key level right here and this level here. Now moving on to dollar franc. Dollar franc, Right now it's not very clear, but let me just run you through it. So right here, if you were to switch to the line chart, you can see that there's actually a double top pattern right here. This is the first top, this is the second top, and the neckline is actually broken already. So in a sense, when you have a double top and the neckline is broken, then we are in a bearish market condition. So you want to be selling. However, if you were to look at this swing low right here, because we have a high, we have a low, we have a higher high. If we were to look at this swing low right here and just plot this level 0.9137, you will see that on Friday, price barely closed below it. So when price barely closed below it, it's not very concrete whether this level is actually broken, right? So what might happen is that price might start doing this on Monday, okay? Again, we do not know, or price might just start selling down, okay? So right now it's a bit difficult to tell because of the candle close, okay? In fact, on Friday, the close was 0.9137, which it's almost the same price level as this right here, okay? So the low of, or rather this swing low right here is 0.9142, and this one closed at 0.9137, okay? Just 5 pips below. So I do think that we need to watch this level very carefully to see if this level is indeed broken. Now, if this level is indeed broken and price doesn't do this on Monday or Tuesday, then potentially we could take a short and target the next level of support, which is at 0.9045, okay? So bearish bias for this one, just be careful about this level and make sure that price stays below 0.9137, okay? Other than that, it should be good if we are able to keep shorting it down until the next level right here. Now let's move on to Aussie dollar. Aussie dollar is same as Euro dollar and Pound dollar. It's the same concept. Again, market condition is bearish because you have a low, high, lower low, lower high, lower low. Okay, it's the same thing. However, same thing, we have a fake out of the low right here. We have a fake out of this level as well. So basically, this entire movement down right here, this is a bear trap, okay? So bears who shorted here are in the red right now, okay? Probably they are either holding their losses or, you know, they are already stopped out. Hopefully that wasn't you. But anyway, this right here is a bear trap. And what I'm saying is that price could potentially retrace higher. So same thing, you can look for a retracement towards this level, which is given by the left shoulder here. Left shoulder, head and right shoulder. Now, I would prefer for price to actually do this, okay, ideally, because it would be a nicer pattern. Okay, I would prefer to trade it like this actually, for price to go up first and then come back down and then look for a retracement trade setup here. Okay, because when this happens, then you will have a very nice up movement here, an uptrend here before it starts coming down. But if let's say on Monday price just does this, then this up thrust is not very strong because it just moves up a bit and then it starts retracing. Okay, so my ideal setup is for price to come all the way up here, come back down, look for a candlestick pattern here, and then I'll take the long. Now again, if you do not have the experience to watch for this, or you don't want to be watching for this, my team will share the signals in the Telegram channel right here. Okay, you can see that we do send out our signals in the free public Telegram group. So please join us if you have not already done so, right? Just click the link in the description down below. Okay, so that's it for Aussie dollar. Let's move on to pound dollar. Sorry, not pound dollar, Kiwi dollar. Now, Kiwi dollar just bounce off support. Okay, so this level is not difficult to get. Okay, this level is given by the previous swing low and here as well. Okay, market conditions, same thing as the other euro dollar pairs, is actually bearish still because you have a low here, high, lower low, and this is not violated. Now, this is where it gets a bit tricky because what we have right here is we have a form of ascending trend line, and if you know what an ascending trend line means, it means that it's somewhat of an uptrend. So right now, I would say that Kiwi dollar is kind of mixed. Okay, it could be both. So if you really want to trade, then the best way to do it would be to buy low and sell high. Okay, again, if you are a beginner, I would recommend you not to trade this kind of setups. But right now, I see that price has the potential to probably come here. Okay, and then probably get resisted and maybe start selling down to retest here, and then after it goes back up. Now, if I were to trade this, what I would prefer to do is I would prefer for price to come up and retrace down, and I'll look for a trade setup right here. Okay, this will have confluence with the trend line and the horizontal level, which is given by this swing low right here. Okay, this is my favorite setup, or rather my preferred setup, or rather preferred way of trading this. Okay, I won't recommend selling right here because of this ascending triangle, right? The last way that you could potentially trade this would be to wait for price to just close above this, look for a retest of this key level, and then you take the trade up. Okay, so this is the other possibility. Of course, when this happens, then this double bottom will be confirmed because we have the first bottom here, the second bottom here, and the neckline. So this level here, 0.71039, is a very, very important level. If we see that this neckline is broken, then Kiwi dollar has officially changed into a bullish market condition. But if it doesn't, then I would say it still makes, it could be buy, it could be sell, right? Depending on how you see it. So please do not trade this if you are still struggling, or you do not yet know how to really trade counter trend, because this is not a good setup for you to focus on. Now, this is dollar CAD, so let's go into dollar CAD. Dollar CAD is a bit clearer. Okay, of all the currency pairs that we covered so far, this is probably one of the clearest. Okay, the market condition is still bullish. Okay, because we have the high, we have the low, we have higher high, or you can say that this is somewhat like high, this is a low, higher high right here. Okay, so either way, the market condition is bullish and you should be looking to buy. However, what we see right here is that this right here is kind of like a bull trap, okay, because people who traded this breakout are probably in the red right now, because after price closed above this swing high, price is now back below the swing high. So this is a bull trap. Now, I'm expecting for price to come down a bit lower, okay, to find support at this level here. You can see that this was the previous swing low right here, and it will have confluence with this trend line that I've drew, connecting from this low right here to this low. Okay, so this is a very strong level. Okay, I recommend that you focus on trading this currency pair next week. Okay, if you really want to trade the easy setup, this is it, an easy setup. The rest of the other currency pairs that I've just ran through with you isn't that clear, but this one right here is probably quite clear. So just be patient, wait for price to come here, look for a candlestick pattern. Again, it could be a hammer, could be an engulfing pattern, could be a piercing pattern. Look for an entry trigger right here, take the trade, and then ideally you can try to target this as your take profit, which is the previous swing high right here. Okay, very straightforward trade. This is what I recommend that you focus on next week. Now, dollar yen. Dollar yen seems like a change in trend. Okay, previously I keep saying that dollar yen was bullish. However, last week we had a breakdown in dollar yen. Okay, yen started selling down. So you can see that right now dollar yen is no longer bullish because this swing low right here has been violated. Right, we had the high, low, high, 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 low, high, high, but this entire pattern was eliminated, or rather it stopped happening, because right now we have this swing low being violated. And if you were to focus on the minor movement right here, this is actually a high, low, lower high, lower low. Okay, it's a bit hard to see, but I think you still can see it if you were to switch to the line chart. Now, this trend line is also broken, so I'm expecting dollar yen to be bearish. Okay, it's more of a bearish market condition, so I'm just waiting for price to retrace higher, which will have resistance somewhere here. Okay, because this was support, expect it to be resistance, and more importantly, we have the trend line confluence as well. Okay, so this is a very strong level. This is another setup that I recommend that you focus on next week. Okay, just wait for price to retrace here, look for a candlestick pattern, and then short it down. Okay, now one more thing is that if you were to short it here, then where is your take profit, right? Okay, I would say that this level right here would be important level. Okay, because if you were to switch to the line chart, let me just get the level correctly. Okay, you can see that this level was support, resistance, support. Okay, switch back to the candlestick pattern, and you can see that this level is looking like a good level to take your profit. So if you were to short here, just make sure you take your profit when it comes over here. Okay, so again, I'll be watching out for this and I'll send out any signals if I see that there's a potential short opportunity. However, one thing to take note is that there is BOJ happening next week. Okay, so there is a big mover. Okay, there's a press conference. So chances are, price might be a bit whippy. So just be very careful if you're going to be trading dollar yen. Okay, you need to make sure that your stop loss is set wide, okay, and set at the correct level. Again, I will send this out in the Telegram channel if I see anything. Now let's move on to gold. Gold previously I had the bias of selling, right? I think I did mention that price just retraced into this resistance zone and sell. But after looking at it again and looking at this movement up here, I think that perhaps it could be a buy. So let me just walk you through my thought process. Now, market condition, I do believe that this is now looking bullish because this is looking like a double bottom pattern. This is the first bottom, this is the second bottom, and this is of course the neckline. And you can see that after the neckline was broken on 7th of July, 8th of July retested this neckline as support. So I'm saying that this could mean that gold is actually bullish, so we potentially could look towards buying. Now, the only problem is that there is actually resistance right here, and this resistance is quite strong. If you were to go back in time, you can see that this was resistance, this was support. So this is a very, very important level. So if you're going to be buying, I would recommend that you wait for this level to be broken, because if you were to buy somewhere here, you're actually buying very close to resistance, because there's not much space between this level and this level. By the time you get a candlestick confirmation candle, something like this, right? Because this is an engulfing pattern, chances are it's very close to resistance already. And if you buy here, you are as good as buying into resistance. Okay, it doesn't make sense. Let's say you were to buy on Monday, something like that, and you put your stop loss like that. You can see that it just doesn't make sense. So I would prefer that you wait for this level to be broken, wait for a retracement, look for an entry trigger right here, and then you can buy it up. Now, the other alternative is that let's say this resistance is broken, then what could happen is that price could fall lower and find support right here, and what you'll see is an inverted head and shoulder, in which it will be a left shoulder here, head and right shoulder over here. Okay, that's the other scenario. If price do come here, I'm also interested in buying, right? You can look for an entry trigger here, because this will still be a good pattern, because it is a inverted head and shoulder pattern, which is a bullish reversal pattern. Okay, so I'll still be looking to buy even if price drops right here. I just would not prefer to buy somewhere here where it's very close into resistance. Okay, Euro Pound, nothing much to update. If you watch my other market outlook video, I did mention that this one is actually in a downtrend, because you have a low, high, lower, low, lower, high, lower, low, but this trend line is acting as resistance, and this level right here, 0.85379, which is given by this spike low and this zone right here, it's holding as support. So price is still bouncing up and down here. So honestly, I don't recommend that you trade this at all. Okay, I do think that this is not the best currency pair that you should be focusing on. But let's say if this level is broken successfully, then potentially this will be the next level. Okay, in fact, it's not difficult to see why, because this is the swing low level right here. Okay, so this is how or rather what I see, but what I don't recommend that you trade. Okay, stick to currency pairs which are easier to trade, rather than currency pairs like this, up and down, up and down, up and down. It's going nowhere. Okay, now NZDUSD last week, what I said actually happened. Okay, last week I did say that NZDUSD, the market condition is bullish. I mean, it's a clear uptrend. There's no reason why you should be shorting this currency pair. Sorry, not currency pair, this index, right? You should be following the trend, because it's a very clear uptrend. I did mention that this level here is a very important level, or rather this is a short-term support level that you could look to buy. True enough, if you were to see this right here, price almost tested it, and on Thursday, price actually spiked this level. Now, price is still bullish. Okay, again, right now we have this spike low, so I would really see this entire zone right here as support. and I'll look to buy somewhere close to here. Okay, chances are you probably have to go into the lower time frame like the H4 to look for an entry, because I think by the time if you use a daily chart, for example this candle right here, by the time you get this like a engulfing pattern, you are buying quite high and your support is here. So the stop loss is rather wide, something like this, which I think it's not very good. Okay, let me just show it to you. It's something like this. I think the stop loss is a bit wide, so ideally you probably have to go into the lower time frame to fine-tune your entry so that you are buying near the support right here. Okay, so long bias for this, please do not short at all. Now lastly, we have pound yen. Okay, pound yen was very tricky. Okay, this was a very nasty sell because it was so bearish and then immediately it just reversed. Okay, this spike low right here whipped out a lot of stop losses. You can see that this is a swing low, so there were a lot of stop losses that were placed below here. Okay, whipped it out, and if we just adjust the trend line a bit, previously I drew it like that, okay, and it broke, okay. But if you, let's say we were to just take into account this swing low right here and just bring it up, you can see that actually price found support at this level exactly. Okay, so this one is still bullish bias, because if you were to look at the big picture right here, you can see that the bias is still up. You have a high low higher high, high low higher high, so still bullish on this one, and we have this ascending trend line. Okay, this one, the only issue is that right now price hasn't actually rallied to this level. So if price were to do something like this, then it's kind of like this one that I talked about. Let me see which one is it. Yes, this one that I talked about just now. I said that ideally I like price to rally first and come back down, because if price were to do this, then the upward movement isn't that strong. So in this pound yen example, it's actually the same thing, because if price were to just retrace like that, then this upward movement is not that strong. Nonetheless, if price were to retrace here, I would still look for an entry, but I would prefer for price to just rally all the way up, okay, come back down, something like that, so that the inverted head and shoulder is very nice, okay, because you have the left shoulder here, the head, and if you see it like that, it's a very nice down, up, down, up, down. Okay, so it's a very nice chart pattern. Okay, but nonetheless, if I can get a reversal or rather retracement somewhere here, then I'll look for an entry trigger to buy it anyways. Okay, so that's all I have prepared for you for next week. But I hope you trade safe. Please take note of these key levels. If you need to rewatch this video, please do it, right, because it's very important, since we have a few conferences next week, as well as a few speech events that are happening next week. So next week is looking like a tough week, so please manage your risk, right? Please never risk more than 3% per trade. Okay, this way it's very hard for you to blow your account even if you get, let's say, 10 trades wrong in a row, right? So please manage your risk, because that's something that I cannot do for you. I can only share with you the key levels, but what you do with them is beyond my control. So I hope that this helps you. If you have any other currency pairs that you'd like me to analyze, please let me know in the comment section down below. Okay, my team do read the comments and will give you a reply if you really have a question about any of these currency pairs that I have not covered. Okay, so again, please join us on Telegram. Okay, the links in the description, and please grab your free day trading guide if you have not. Okay, because what I just shared with you will not make sense, right? You will not know how to trade it if you do not get a free day trade guide. Okay, the links in the description. If not, that's it for today's video, and I hope that we have another profitable week together. Okay, I'll see you in the Telegram channel.